Basically, if you draw a Fibonacci retracement, horizontal lines, and a Fibonacci channel, that gives you a pretty good strong idea of a support and resistance. All right. Touch base on this. One of the other indicators that I just want to show, it's important to know the significance is heads and shoulders. So regular head and shoulder is a head and shoulder pattern. It's a technical indicator with chart pattern described by three peaks. One on the left side, a shoulder, one on the right side shoulder. These shoulder values doesn't have to be same or exact. It could be slightly lower, higher than on either side of the head. And the middle head is the highest. So this is a regular head and shoulder, and this is a inverse head and shoulder, where the shoulder is formed inversely. The head is slightly lower than the shoulders. Again, these values doesn't have to be the same. That's what it says. An inverse or a reverse head and shoulder pattern is also a reliable indicator, which can also signal that a downward bearish trend is about to reverse into an upward bullish trend. So if you see an inverse head and shoulder, two peaks similar in height, and the middle peak being lower than the adjacent ones, then that basically shows a future reversal from bearish to a bullish trend. I'll show you what the future trend is on the chart. So if I go to S&P 500 on a line chart, I'm on September 11th, right? So you see here, there's one shoulder here, there's another shoulder here, and there is head, right? That's what the inverse head and shoulder is, right? You have a shoulder, head, and shoulder. And this is the neckline. Same thing here. You see this, the significance is, okay, I want, Anibhai, can you do the math? So this is the head, right? You see the value is 3303.25, right?
Yeah, yes.
The right shoulder is 3330.25. The left, the left shoulder, right shoulder is what? 3327, right? So if you subtract the head, 3303.25 minus this shoulder value here, 3327. How much is that?
Yeah, roughly 26, right?
So 3303 minus 3327. So 24, right?
Yeah, yeah, yes.
Right?
Yeah, yes. Yeah.
So if you add 24 to this 3327, how much is that?
51.
3351. You're adding 24 to 3327, right? We are just, the difference between the head and the shoulder here is 24, right? And then we are adding the difference to this value of the shoulder. So 3327 plus this difference between these two, that is 24. How much is that?
3351.
3351. What do you see here?
Yeah, yeah, I see that.
How much is that value?
Yeah, that's exactly 3351.
Yeah. So if I see a pattern with a left shoulder, head, and a right shoulder, and I do the difference between the two, and I add the difference to the shoulder, that gives me the next bullish trend value of 3351. Magic?
Yeah, yeah. That sounds good. So Mohima, in this regard, I have one question for you. So whenever we change the duration, right, from 1 hour, 4 hours, and days, the charts, looks different, right? In the same way, if you use a different duration, then the chart looks different, right? So
Yeah,
which duration is something that's common that we can follow and take some action.
um, eh, see, most of the the professional traders, technical traders, my mentor keep always says this: the big boys stay with the day duration,
Mm-hmm.
but it doesn't mean that you don't look at others. Right now, to show you an example, I'm in a 1 hour chart,
Mm-hmm.
right? And the thing is, for that one specific hour, from 11 September, from 3 to 4 p.m., right? So
Mm-hmm.
whatever the period is here, whatever you select, that's what you see the candle.
Mm-hmm.
If
Yeah.
it's hourly candle, then it has an hourly low, high, opening, and close based on the previous hour. If you go to the day, it's just basically high, low, and opening and close of the price based on the previous period. If it's a day. And if it's a line chart, it's basically touches the closing of those hour. If it's I'm in the hourly chart, and if I select the line chart, it basically shows me the close at every hour.
Mm-hmm.
It's not a good representation. I sent an article in the group recently, right?
Yeah, yeah, yeah.
The candle chart is the best indicator. Why? Because it gives the good picture. It shows what the lowest for that hour is, what the highest for that hour, what that opening and close is. If the
Mm-hmm.
closing is more than the opening, then it's a green based on the previous.
So,
So I think we
when
have
when we
only
zoom in,
one. Yeah, we have only 1 minute, so we may have to uh, log in again.
oh, okay.
Yeah. Second. So let me just log in again. All right.